Hello, everybody. I'm Toby Gennaro, and yeah, it looks like we got a decent-sized crowd on for this morning, so that'll make some good interaction. Let's do a sound check real quick. Had a little bit of a technical issue this morning with broadband, so I think we're clicking along all right. But let me know if the sound is coming across loud and clear, and you can see the current splash screen. It says Advanced Strategies for Liquid Markets. If you guys can hear that loud and clear and see everything, just let me know via the question box on your screen. And we'll jump right into the content here as quickly as possible. Great, guys. Thanks for doing that. You're Johnny on the spot. So we'll get the recording started here and do a formal introduction for recording purposes, and then launch into the content for today. Short session, about 30 minutes. So we'll get to it. Hello, everybody, and welcome. I'm Toby Gennaro, and I'll be your presenter for today. The topic for today is Advanced Strategies for Liquid Markets. So I'm going to be talking through a specific technical trade setup that you can use in your own trading. We'll be able to identify a specific entry point, an exact stop loss, and then our profit targets by utilizing this particular strategy. So for those of you that are on the live webinar today, if you have questions during the session, you can type those into the question box on your screen. I may be asking you some questions as well, so we'll try to keep it interactive. Always makes it a little bit more interesting. And we just have to put up the risk warning and disclaimer. Got to do this as part of the business as we normally do. If you guys can just have a quick read through this, leave it up for about 30 seconds or so. What this is saying in brief is that we provide education only, which means we do not give any financial advice. And as most of you know, trading the markets can be risky. It's not suitable for everyone, and you should seek independent professional advice. Okay, everybody good with that? And then one more disclaimer here from Nadex, just a short one. If you have a quick read through this one, and that'll wrap up the disclaimers for this morning, and we'll get to the good stuff here shortly. All right, very good then. Moving right along, let's get started here. Now, since this webinar is brought to you by both Nadex and Trade with Precision, just want to take a couple of minutes here, introduce both companies so you guys understand. Trade with Precision was created back in 2006 by a gentleman by the name of Nick McDonald as a provider of trading education for retail traders. So we are an international team of traders that provide training for some major brands of exchanges and brokers around the globe. And we teamed up with Nadex to bring you some very specialized education specifically around their products. So Trade with Precision is a company run by traders for traders, and we are specialists in trading strategy education. Nadex is actually a derivatives exchange, and so they are subject to the obvious regulatory oversight by the CFTC. So this is a regulated industry for your protection, which is good. Nadex has been in operation since around 2004, but they are also part of a much larger derivatives organization known as the IG Group out of London. Nadex operations, however, right here out of Chicago, which, as most of you know, is the hub of the futures and options market. So all contracts that we'll be talking about are cash settled. There's no risk of having, a mountain of corn delivered to your front yard, anything like that. There are over 25 global markets that you can trade with two very unique contracts, binary options and bull spreads, or Nadex spreads. And today's webinar will be focused on a trading strategy that you can use to trade these types of binaries and spread contracts, okay? So you'll find the Nadex trading platform available on all of your devices. So whether you're in the office or on the go, you can monitor your positions or place a trade, close a trade, that kind of thing. Some automated filters exist for identifying trading opportunities simply by searching on the binary price. All devices are fast and secure with flexible features that you would expect from, like a normal desktop platform, but now you're mobile and you're on the go. You'll find most popular markets available in real time with customizable chart features. You can have multiple time frames, indicators, all the things that you would normally expect. So just like in the office, you can view your open positions, all your working orders, your account balances, all while you're in motion, or even if you're just around the house, in the backyard, or on the patio or something, okay? And for today's agenda, we will be walking through some advanced technical analysis tools to show you guys a technical trade setup that we use on a regular basis. We'll look at things like trends. We'll look at multiple time frames, things like support and resistance levels, pivots, Fibonacci retracement levels to determine our trade entry points. We'll then combine all of these technical ingredients to form a trade strategy that we can use over and over again in the markets as an edge for ourselves. And so I'll give you guys another webinar plug where we're doing this live and showing you how to use the strategy in real time regularly each week and utilizing the benefits of a fixed risk contract like a Nadex binary or a Nadex spread contract. Now in this section, let's get into some technical analysis that we use to trade our own money and show you guys some of the key things that we look for technically in the price action. Now the typical three trending conditions that we'll find in every chart that we look at, in this first example of an uptrend, we can immediately see the chart structure here defined purely by the price action alone. Okay, at the very first glance, we see the price action making successive higher highs and higher lows. Okay, once we identify the predominant trend here, we can begin to look at the individual candles that then make up this trend to determine the price predictability. And I just want to see some commonality amongst the sizes of those candles to give me the confidence that this trend is still strong and clearly ready to continue. In the next example of this downtrending chart, we can see those similar characteristics of successive lower highs and lower lows that comprise every downtrend. You can also see in the price action here that every time we get a large candle move, it's followed up with a snapback rally. And that's why it's important to look for small candles to comprise predictable trends so we can anticipate exiting our positions on some of these long candles when they're usually at the end of a long run, and that's when they typically occur. So we've seen an uptrend, we've seen a downtrend here, and then there was no trend. And if our eyes are trained to identify trending chart structures, then we can very quickly determine here that this chart is not trending, okay, either to the upside or the downside, but it is rather than ranging. So as we can see, there's no clear succession of higher highs or higher lows. In this scenario, we can see a lower low followed by a higher high, and then a higher high followed by, you know, another lower low, and all of these different types of, you know, bantering back and forth. So the difference in these chart structures are very obvious to us, and we can readily identify tradable trending charts really at a first glance when you look through all three of these. And these are really the only three chart structures that you need to understand. If the current chart that you're looking at doesn't fit into one of the three, then you shouldn't be trading. Okay. Now this here is where some of the complexity lies in recognizing price action structures and defining a trend that we're looking for. So when you look across multiple time frames, we can see the obvious trend is down just by taking a step back, kind of seeing the lower highs and the lower lows that you see here on the 60-minute and the daily charts that we're looking at here. Gives you a better sense for what's happening in the market overall. Don't be fooled by what seems to be, you know, a lot of simplicity within a trend. Trends can become very complex, and the key to getting these trends right is to look at multiple time frames to get multiple charts in agreement. Now, when you begin to see the weekly, the daily, you know, the 240, the 60-minute all trending to the downside, now you know you're most likely in a solid trend and you're selling the rallies that occur. But as you're probably already aware, you know, what happens when these charts are all in conflict, one's going up, one's going down. You know, again, it's not a problem. What you're doing is you're just waiting for the charts to get back into alignment. All the charts are telling you is that there's no confirmation of a good continuation pattern continuing in the current direction. So, you know, the worst thing you can do at that point is kind of jump the gun, dive back into a downtrend before actually getting the proper chart setups and structures across all of your time frames. So in this particular case, we can also check the 120-minute time frame, the 240, the 480 charts to look for a series of time frames in agreement between the 60-minute and the daily. That's what I always do. This gives us then a lot of confidence as technical traders to trust the charts and do what they're actually telling us to do. Now, it doesn't matter what the time frames actually are, such as here, it's the 60-minute and the daily. Remember, it's the trigger chart and the confirmation chart. So these charts could be, a 5 and a 15-minute time frame, or it could be, a 1 and a 2-minute chart. It doesn't matter what the time frames are. It just matters that you're looking across a range of time frames to get good confirmation of a valid trade setup, in that you're aware of the higher time frame trend. So in looking for trends, I'd be looking at, say, a 60-minute and a 120-minute, and then using the daily chart as my anchor chart. And so I want the trade setup that I'm going to show you on two side-by-side time frames, either a 30-minute and a 60-minute, or a 60-minute and the 120, or the 120 and the 240, something of that nature. But you're always using a side-by-side time frame on two different time frames to determine, if a valid trade exists in the price action based on our strategy. Now, the golden rule of support and resistance is a very basic concept. Most of you probably have heard a lot about it at some point previously. We've talked about this on a lot of previous webinars. When we identify these support and resistance structures, we need to keep them in memory as we look through our charts to identify when price is retesting these levels, since the exact price level may not be visible on your screen. Okay, so you may need to scroll back unless you're using horizontal lines on your charts like what are shown here. So let's look closer at this chart setup. We have multiple touches establishing our true support and our true resistance levels. You'll notice that we're in a consolidation here, or a sideways market, and the price action is moving steadily into these support and resistance levels until the price action then retests a previous level, and then that level responds in the opposing fashion. Okay, so the broken support level now becomes resistance once the level is retested. The same thing with the resistance levels here. Once they are broken and then retested, they now become support in certain circumstances. So if this was a strong trending chart, then we would easily know where to look for our setups to join trends at a safe, predictable location in the price actions. That's why we always want to use these horizontal lines in our charts, never sloping lines, because the horizontal lines really give us a lot of specifics about the price action that helps us to build good trade ideas and trade concepts around those horizontal levels. Now, if you already work with pivot points on your charts, then this will just be a review for you. It'll look something like this. Each of these dotted lines represents a calculated pivot point that you can readily see the day's price action reacting to the various pivot levels. Now, keep in mind, there is no guarantee that price will respect these levels on any given day, so it's imperative that you couple these pivot levels with actual historical price action to help determine clusters of support and resistance, which is what we're looking for. So this way you'll have multiple technical factors working together to determine valid levels for trading and looking for your strategy setup around these clusters of support and resistance. So again, just one more technical factor that you can add into the mix. And I have all of these circled here where you can see, on any given day, it's pretty close. I mean, they're pretty much hitting these pivot levels, right on the numbers, and that's why they're used by a lot of folks. And if we couple those together and look at the historical price action for a given day, we can see, where things are, responding from, the bullish level and from the bearish level, but it's still respecting the same level. Those are going to be really key areas for us to to notice and to look at. A couple of questions here that I'll take. Just to remind you guys, after if you have any questions about any of the content, just feel free to lob over a question via the question box on your screen. I'll be checking that after every slide. If I can respond to a question while it's still fresh in your mind, more than happy to do that. Ernest is out of the gate with the first question. He's asking, do you use the Nadex charts, pivots, or outside charts? The Nadex charts, I mean, you can use the Nadex charts. I mean, they've done a lot of work on those, and they're actually very good. So you'll have everything that you would normally expect in terms of indicators on those charts. And then in addition, they'll have all the Nadex binaries and spread contracts overlaying those charts. So I highly recommend. And then on top of that, you get all of the data for free, which is really nice. Otherwise, the data can cost you some cash. So yes, Kenneth has got a question. Can you supply me with your website address? Yes, it's www.nadex.com, and on that site you'll also find where we have all of the webinars for each week and those kinds of things. You can keep up with us. Okay. All right. So how do we use Fibonacci retracements as another technical indicator then? Well, the biggest mistake I think people make with Fibonacci retracements is really just drawing the fib retracement lines improperly on their charts. The correct way to draw fib retracements are going to be from the swing low to the swing high, and that's for an uptrend, and then from the swing high to the swing low in a downtrend. So you're basically drawing the Fibonacci retracement going in the direction of the trend. So if the trend is up, then I'm drawing it from low to high from these key points like swing low to swing high, and then from here from the swing high down to the swing low, and then that sets up our retracement. So if you do this improperly, then you're not going to get the proper retracement levels in the correct position on the chart, and then nothing is going to make sense to you. So drawing the lines properly, as I've described, is going to place that golden ratio in the correct position on the chart, which is going to represent the correct Fibonacci pullback level. So as you can see on these charts, I've got the fib buy zone and the fib sell zone identified by the green and the red arrows, and this is going to be the correct pullback structure from this swing low to this swing high, and then we do a 50 to 62% retracement into that sweet spot, and that's where we're looking for our setup for the next move, and that's why you get these stair-stepped patterns to many of these price action trends. One way to know that you have the Fibonacci drawn correctly is to look at the pullback direction. The pullback direction should always be toward the 100% level here at the bottom, and that's going to set up the 100, the 78, the 62, and the 50, and then you know you have it set up correctly. The top is always going to be 0, and then in a downtrend, the bottom is always going to be 0. Okay. So let's go ahead and put everything we've learned here really quickly together and begin to build a trade idea to see exactly what that looks like. Now here's what we have. We have a 60-minute chart on the euro dollar, and now we're getting the third pullback into the buy zone. Okay, right here. Once again, we draw the fib levels from the swing low to the swing high, which I've done right here, the swing low to the swing high. We're drawing them in the direction of the upward trend, so we're drawing them from low to high. And we have that cluster sitting in right around that sweet spot between the 50 and the 62%, dipped a little bit below that, but they usually stay above that 78% level, and it creates a nice rejection candle right there and gives us another confirmation and a break through the high of that candle that we're back to the upswing once again. So as you can see, price continues to fall just past the sweet spot. Buyers jump in, create that rejection candle, and then we have a reasonable stop loss always beneath the 78.6 level, or even slightly lower, like at the most recent previous swing low. And then our entry is going to be right at the break of the high of that candle. Okay. Here's the summary of our trade idea that we've been building over the last slide here, and I've described the support and resistance clusters. Here's a closer look at the resistance level becoming support just ahead of that 78% retracement level, but not far from our original zone at the 61.8%. So we've been able to strengthen a single indicator like a Fibonacci to include additional technical factors that give us confidence that these levels will hold once price approaches. So typically price will approach these levels with a lot of velocity. You can see these big candles. There's a lot of selling going on right here. And it can seem very scary to kind of step in front of that, and get in right at these critical points. But as you can see, the work is all done prior to price arriving at the anticipated level. So your nerves should be calm knowing that you're in a strong upward trend. Price is just pulling back into a known level that you can trust. And if we're wrong, then we have a backup plan, knowing that our stop loss is at an acceptable level and it's protected by the trend, and it's protected by the fact that we know upward trends create higher highs and specifically higher lows in this case. Okay, so our entry level on this trade is going to be at the 134.30, which is right around this red line, or at the break of the rejection candle right here. And our stop would be somewhere in the underlying market around 133.89, which would be probably somewhere around the swing low, which would be good. You can also do an aggressive stop at the bottom of this candle as well. I would normally go with the swing low. And so our first profit target then would be, based on that, would be about 41 pips, which is the 134.71 level, and our ultimate target back at the swing high of 134. So we'd be looking for this to break the high of this candle, enter the trade, and then the distance between the entry and the stop, or the entry and the stop here, is going to create that first target. So depending on your level of aggression, your first break-even price target could be here, or if you're using this swing target, then it would have to be more up here, because we're trying to get a one-to-one in terms of, if we're risking this much, then we want to get at least that much before we actually put in a sell order for half of our trade to get the trade to break even as quickly as possible. Quick question here. Ernest got a quick, could you draw a, I think you're talking about a Fibonacci. Could you draw a Fibonacci retracement on a live chart? Actually, we'll be doing that, Ernest. So whether you're trading a Nadex contract or other underlying markets, like with a Nadex contract, the nice thing is you don't need a stop loss, and that's the whole idea of an option. I'm just trying to give you the strategy here so that you understand where to place some of your profit targets. The only way we can identify a profit target is to understand where we would define our risk if we were utilizing a stop loss. So even when you're trading binaries and spreads, you still need to understand the trade strategy and how you employ a stop loss, because that helps us then to define our risk, and then we can then define our profit targets based on our risk. So in other words, we want to be utilizing a risk assessment of, hey, we're going to risk $1 to make at least $1 or $2 or $3. I'm not going to risk $1 to make just 50 cents, because if you do that enough times, you need an extremely high success rate in order to ever be profitable. So that's why I'm using the stop loss there. Didn't mean to confuse you with that. We'll look at the Nadex spreads around our entry cluster level of 134.30 going long. As you can see, I've got the spread ladder up right here. The first contract is just slightly out of the money with a floor of 134.60. As you can see, the asking price is 134.73 going long, which translates to a 13 pip risk. Second contract has a floor of 133.35. Asking price is 134.61. It's got 126 pips of risk, quite a bit more. So this contract is going to be more expensive since it's already in the money. And since our ultimate profit target is at 135, both contracts could work out, but we'd get a much better reward to risk if we used the one with the 134.60 floor contract, and then with the high as 137.1, which gets us above that retest level up around 135. So we'll go with the first contract in the list with an asking price of 134.73, and that means we're risking 13 pips for a potential profit of 70 pips, just depending how fast the market moves relative to the expiration time. And since our trade setup is on the 1 hour chart, it's taken about an average of 5 to 8 hours for the market to respond to these pullbacks. So the first question we need to ask ourselves is, do I have enough time on this contract? And at 3 hours, that's considerably under the historical guidelines of how the euro dollar has performed on this particular setup based on this chart. This may not be the optimal contract to trade, even though we may still be able to make a profit. There may be better opportunities for reward with a different contract. But that's the setup so far, okay? So you may be thinking, why does this particular scenario work? And here's really the method to the madness that I've been talking about. It's called trading with the trend. So taking the path of least resistance, going with the momentum in the market, gives us price action predictability and confidence that the trade is a high probability setup. I think you guys have probably heard the term, the trend is your friend. These trends have the tendency to move in what we call waves. In other words, waves of buying and selling momentum. So identifying the turning points within these advancements and retracements just gives us a lower risk trading opportunity to capitalize on the trend momentum. And since we're trading in the direction of the predominant trend, there is then less of a probability to have a sustained move going against the trend. So we're anticipating these turns in the price action using the clusters that we've been talking about related to multiple support and resistance levels clustering in that same zone. So these strong clusters within strong trends often respond like a brick wall that price can then bounce off of and create trading opportunities for us going in the direction of the predominant trend. Make sense? Okay. Find some strong trending charts across multiple time frames to ensure that there is good price momentum and predictability in the market that you're interested in trading. Then move down to the lower time frame clusters of support and resistance levels to find that historical price action combined with any pivot levels and Fibonacci levels. And so as I've stated already, the more clustering you can find within the same price zone, the stronger that zone becomes. And then the entry is on the pullback to that cluster level, trading in the direction of the trend. The price action at this point may be pretty furious, and it'll seem scary to enter the trade at that point, but again, the Nadex contracts have a built-in stop loss, and that just gives us another advantage on the trade setup since we don't have to use a stop loss and don't have to worry about getting stopped out. Now, as we move down to the lower time frames, the 4 hour chart is beginning to trend down with lower highs and lower lows. As you can see right here, price has been flirting with this 122.50 level. Right here, it looks to have made several closes below this level, and it's now rallying back up into that level to retest, and we can see where that has been tested previously before. On that same chart, when we draw the first fib retracement, the 50% retracement level clusters with that 122.50 level, which is our key support level there, which when support is broken through, like you see here, and then it rallies back up and it's retested, usually becomes resistance for the next move lower in this overall downtrending chart. So we have a key level of price congestion. We have a sweet spot, 50, 62% fib level overlapping that price level. This provides us a very specific entry point as well as a protected stop loss. We also spot a weekly pivot point and a daily pivot point in the same area around that 122.50 level on our 1 hour chart. So it looks like we have a few of those items then all coming together on this setup, a number of technical factors all combining to give us a good solid trade setup. Okay, we've got the 50% level couples with the 122.50 level and the pivot level as well. So we've just identified then a good zone for ourselves. It's a very reasonable level for a turning point in the downtrend, and we don't need to worry about stops when we're using Nadex contracts since they're built right into the contract. But we always want to be looking for that key level since it is a critical level and criteria to our trade setup. And then here are the results of that trade setup. Price action didn't stop exactly at the level that we anticipated, but nonetheless, it still reversed in the zone. And we had identified and continued in the direction of the price action trend to then retest the previous low down here. So it gave us a pretty good idea of where to look for some of our profit targets. So at this point, this is an obvious level to then take profit on the retest here at this point, since there could be a significant bounce at this level, which would then nullify our trade profit, and we could potentially run out of time on the Nadex contract. So very important to take profit on these contracts as price action moves in the direction of your trade. So what we'll be doing is we'll be using these types of trade setups and some of this price action analysis every Tuesday morning on the Live Market Movers webinar. Comes up at around 11 a.m. Central Standard Time, where we put these trade strategies into action on live market charts. So great opportunity for you all to see how we deploy these strategies in real time. Nadex really just making an investment in your success as an investor, and that's why they sponsor events like this today. A couple of different ways you guys can get in touch with us. Phone and email listed here for any questions that you may have, or you can ask me your questions right now. Just use the question box on your screen as you've been doing. Demo accounts are also available to provide some familiarity with the contracts that we've been talking about today. For current members of Nadex, if you'd like to begin trading again, log into nadex.com. Take advantage of the advanced education webinars. It'll take your trading to the next level, where we show you all the details of some of these strategies and not just an overview like today. If you are new to Nadex and would like to set up an account, just go to nadex.com, click on, I believe it's the orange box in the top right. It says sign up. Fill in your details there. Someone from Nadex will respond via email to get you started. Now, let me just take a couple of questions here before we wrap up. We're at the bottom of the hour here. Bertrand is saying, is this presentation recorded? Yes, it is. So you'll receive the recording with all the video within 24 hours via email. So you'll have that to review, and then it'll also be posted to YouTube on the Nadex channel. Ernest has got some comments there. Okay, so just a couple of comments. So very good. Appreciate all the comments, guys. Glad you enjoyed the session. Glad you'd learned something. Before you do sign off, there is a short survey upon your exit. Please let us know your thoughts there. Fill that out and let us know how we did. And again, I'd like to thank you all for joining us this morning, and join us next week, Tuesday, for Market Movers. And we'll show you how to put these into action in real time. And so this will conclude the webinar for today. Have a great rest of the week trading, and we'll see you next time. Take care.